Welcome to Green Shoe Radio. I'm your host, Mark Bunting. Our guest today is Aurora Davidson, President, CEO, and a Director of Amerigo Resources, which trades under the ticker symbol ARG on the TSX and under the ticker ARREF on the OTCXC in the United States. Thanks so much for joining us today, Aurora.
Mark, it's our pleasure to be here. Thank you so much.
Now, there are several unique aspects to Amerigo Resources' story. Can you describe the history and the nature of the MVC operation that you have in Chile, and also the company's relationship with Codelco, which many know is the biggest copper miner in the world?
Absolutely. No, that's a great place to start with. Amerigo Resources has a single operation in Chile. It's called MVC. And what MVC does is producing copper concentrate and also some moly concentrate by processing tailings. And tailings are essentially the waste material of mines. So we are not a traditional mining company that has an ore body from which we go in and conduct, initially exploration activity, and then we go on into building a mine, extracting the ore, transporting the ore, processing the ore. What we do essentially is work with the end material of the world's largest underground copper mine, which is Codelco's El Teniente mine. And in doing so, we are essentially, becoming and being a fundamental part of the circular economy, because we are further extracting significant amounts of copper concentrate from what was essentially just waste material in the form of tailings. MVC has been doing this for 30 years. MVC was formed in 1992 by a group of Chilean entrepreneurs who were had the idea of processing tailings from El Teniente. And they did it at a small scale for a number of years until Amerigo bought MVC in 2003. When Amerigo bought MVC in 2003, we were producing just north of 20 million pounds of copper. Since then, we have been doing a significant amount of investment in order to do two things: expand the plant capacity and be able to process more of the fresh tailings from El Teniente. Fresh tailings is the daily production that comes from the mine. So we're now essentially able to tap into 100% of the fresh tailings that come from El Teniente downstream to MVC. But we also added into that relationship with Codelco the rights to have the processing rights for two of their historical tailings deposits. Now, what are historical tailings deposits? Essentially, deposits that, in this case, were built up from 1935 to 1974, and are just inactive tailings deposits that we now have the rights to process those tailings from. And the attractive part about working with historical tailings is that you're working with higher grade tailings than the fresh tailings. And the reason being is that as time has elapsed, that people have become more efficient, mines have become more efficient, and so they are able to recover more copper from their process, and thus their tailings contain less waste, less copper grade. That's a way of identifying it in their tailings than they did before. So now we have the rights to both fresh production and historical production. In doing that, Amerigo has increased production substantially. I mentioned that we were producing north of 23 million pounds of copper when MVC was acquired by Amerigo. Last year, we produced 55 million pounds of copper. And this year, our guidance was initially for 61 million pounds of copper. We're going to be producing above that. Now, you were also asking, Mark, about our relationship with Codelco.
Right.
Having a relationship with Codelco in the copper world is like, having the relationship with the biggest, greatest copper partner you could have. Codelco is the biggest copper producer in the world, and just having that relationship in the form of us partnering with them in that completion of their full cycle of production at El Teniente has been fundamentally important for us in terms of the reputation that comes with that type of relationship with Codelco.
Now, Aurora, also unusual for a miner is that Amerigo pays a dividend. You've recently reinstated that policy. And the company is just wrapping up a $25 million share buyback. Let's start with the dividend. What's the thinking and strategy there in having a dividend?
It is basically a reinstatement of a dividend. Amerigo has been paying dividends and paid dividends over a number of years, from 2005 to 2008. And then from 2011 to 2012, we paid north of 47 million US in dividends. We used to pay a semi-annual dividend. The company has been generating a substantial amount of operating cash flow, and thus the view of the board of directors is that that capital has to return to shareholders. So starting in this quarter, Q3 of 2021, the board of directors has reinstated a dividend. We're going to be paying quarterly dividends, so four times a year, regular dividends. And we started this quarter. The view that we have in respect of a dividend policy is to have a sustainable dividend that can grow gradually over time, and does not need to be cut back. So we're starting with 2 cents Canadian per share on a quarterly basis, and it's not a significant dividend. Just for comparison, this year, year to date, for the 9 months that ended September 30th, our earnings per share have been 22 cents Canadian. So this is a conservative dividend, and we're fine with that. It's a good way to start returning that capital and coming back into a dividend-paying modality in which we were before, and we were quite well known for that before.
And you're also reducing the share count, which investors often like, through this share buyback. What kind of message do you think, Aurora, that sends to shareholders in terms of the strength of the company's financial position?
Well, it sends a very strong message, Mark, and we did it concurrently. When we announced the dividend payout policy, we did both the announcement of the reinstatement of dividends, and we also announced a substantial issuer bid for $25 million Canadian. What it says essentially is, we know that our share price is a bargain price at these prices, and we want to buy back shares at that price. That's a very simple message.
All right, very good. Now, you touched on Amerigo's production guidance for this year, 61 million pounds, although I understand you're quite confident that you can exceed that. Can you give us an update on production?
Sure, I can. When we announced our results for Q3 of this year, we essentially were 9% of our guidance. What we've done is, in terms of our production targets at MVC, we have broken them down in quite a detailed way with our operating team in Chile. We're tracking production on a daily basis. This is not a guessing game. We know exactly where we're standing as we move through on a day-by-day basis. What has given us the lever to increase production has been a series of things. On one hand, we're getting more volume from fresh tailings from El Teniente, and we're getting a good grade from that material. But that's fine, right? What we did was did a series of modifications to our plant this year in order to be able to capture all of that volume. You can get the volume, but if you cannot use it, if you cannot process it efficiently, or if you're losing recovery in the process of getting more volumes through your circuits, then you're not doing a good job. So we said, okay, we have this volume coming through. How can we, or what can we do to ensure that we're not trading off a recovery in the face of having higher volumes? And our team did a phenomenal job of doing their their magic metallurgy tweaking and circuit tweaking. We didn't invest a lot of money doing that, but that's just that comes from having the data, having the analysis, having a team that's fully committed to producing at least the amount of guidance that we're giving to the market.
Amerigo gets 100% of its electricity from renewable sources. How significant is that in terms of ESG, with that being all the rage right now, of course? And also, can you be specific about what kind of renewables make up the bulk of your electricity supply? Is it through hydroelectric?
It is hydro. It is hydro, and Chile is a country that has done a substantial amount of work in their energy matrix to have access to renewables. They're strong on hydro, they're strong on wind, they're strong on solar. But in our case, it's hydro. What was important for us with this power supply agreement were a number of things. One of them was the supply of power. Power is fundamental to our operations. So we needed to be sure, we needed to have full certainty that we would have the adequate and the necessary amount of power supplied to our operation. We also wanted to have economic certainty because power is our single most significant cost. If we can control the cost of power, we have done a phenomenal job of controlling our cost structure. And that's what we did with this power supply agreement, where we now know what the rate of supply is going to be for us from now until 2037, which is the current term of the contract that we have with El Teniente. So that was fundamentally important. But in the process of looking at the economics and the business drivers of this power supply agreement, we also discussed with our power supply company, what can we do in terms of clean power supply? So we are one of the first full clean energy supply contracts they have in Chile. This is great. From an ESG perspective, it completes our ESG credentials, which start with the fact that we're processing from waste material. We have now a clean power used throughout our operation. And what we're doing, is essentially a production process that not only produces copper, but helps manage tailings more efficiently for our partner Codelco. So it's a very virtuous cycle of ESG-driven copper production. I think without sounding over promotional here, I think our story really is one of a kind in terms of the green aspect and the green attributes that our copper production brings into the market.
Let's look more broadly at the copper market. You've said the next several years could be the strongest ever for copper in history. Now, is that strictly because of demand for electric vehicles, demand for renewables? Does that make this time truly different, or is it more than that?
You've alluded to two of the big drivers, electric vehicles. And when you look at an electric car, it uses 3.7 times more copper than a conventional car. That in and by itself is giving you a big driver of what demand increase could be looking at. But it's not just the car, it's the whole infrastructure to make that car run, right? You've got to supply the electricity. And when you're looking at not only supplying and having the right amount of electricity supply, grid supply to come up with providing the framework for electric vehicle in a mature stage, you're also looking at how is that electricity going to be generated. And if it's going to be a green source of electricity, then you're also looking at a hugely major copper requirement, 4 to 6 times more copper required to generate a megawatt of clean energy than conventional energy. So you start putting those two things together, and it's quite significant. That's on the supply side. On the demand side, on the supply side, what we're seeing is that we're only coming out of a decade essentially of underinvestment in the copper sector. There haven't been a lot of new projects coming along. Projects that are coming along are lower grade projects than what we saw before. So there is that big challenge of, on one hand, the world is going to be needing a lot of copper, and on the other hand, the industry is really struggling to keep up in terms of the adequate amounts of supply without that significant demand ramp up that is coming in the next years.
Aurora, lastly here, you've laid out a compelling investment case for Amerigo Resources from an investor standpoint. What are the main catalysts for the company that investors can look forward to the next 6 months to a year or so?
Look, we're a company that generates a substantial amount of cash flow under these copper price environments. When we're looking at what Amerigo has done this year, we're essentially producing just north of 60 million pounds of copper. What we have generated in terms of EBITDA in 9 months is $65 million US. That is a significant amount of cash that eventually is starting to be returned to shareholders. We launched a substantial issuer bid. We're looking at doing normal course issuer bids to complement that in the future. We have a strong dividend policy, and we have a strong business that will keep on generating a substantial amount of cash flow. I think that those are significant drivers in and by themselves. We also think that our business proposition of processing tailings and producing copper is not something that will just be contained or should be contained in one business case, as is the case of MVC and El Teniente. Amerigo, through the MVC operation, has a substantial amount of operational experience, business experience, project deployment experience that could be easily replicated in other mines. Every mine in the world has tailings. There are a substantial amount of historical copper tailings deposits in Chile. We know Chile well. So the future looks very bright for us in terms of what else can be done with a project of similar characteristics to MVC.
Aurora, thanks so much for your time today. Good luck with everything, and I'm sure we'll talk down the road.
Thank you so much, Mark. Thank you. Have a great day.
Okay, you too. You've been listening to Green Shoe Radio. Our guest has been Aurora Davidson, President, CEO, and a Director of Amerigo Resources, which trades under the ticker symbol ARG on the TSX, and over the counter in the US, ARREF is the ticker there. I'm Mark Bunting. Thanks a lot for listening, and we'll talk to you next time.